Welcome everybody. This is the Day Trading Options Daily Review for January 2016. And I'm Scott. He's Alan. We've got a little bit of an echo going, so Alan, if you can just mute yourself for a sec. Alan has been running around the world getting married in places like Sudan, but he's back home, so we're happy to have him and his beautiful wife back in Canada with us. We'll be doing these on a little bit more regular basis, but basically we're going to be talking about 10% in 10 minutes and how you can do that with the options. And the stock market's been very, very interesting. It's been going all over the place, crashing and having lots of fun, which gives us sometimes opportunity, sometimes not. And if you head to the descriptions, you'll see some links to some courses that we've got, some great prices, get you started, and when you join up, we'll give you a free month of the software that you're seeing on the screen here so you can learn how to use it, learn how to get out of the 40-year plan, and have some financial freedom and be able to maybe go to Sudan and either get married, have another honeymoon if you're already married, or some other place in the world that you may want to go. You don't have to go to Sudan if you follow our trading. You just have the ability to go wherever you want, whenever you want, which is kind of nice. So with that, welcome, Alan. What's been happening to the stock market? Like, what's going on? Are we in the big depression, the crash? Is it?
Well, yeah, we're definitely in a bear. I think it's going to keep going. We're going to get a little bit of an up. I wrote a blog because that's what I do for people. At this point here, I knew that we were going to have this business down here, and there's a lot of economic, and it's not complicated to understand this stuff, and that's why it's in a blog, nice and simple. But this is 6,000 stocks, and you want to pay more attention to that than you do with the Dow, because the Dow is only 30 stocks, and you go, well, what's the difference? Well, it's everything. The Dow is the top 30, which are sometimes called large cap and blue chips and all that kind of stuff. I don't care what you call it. It's only 30. It's not 6,000. So this represents 6,000. And this is daily ups and downs, and I expected that this week would be coming up a little bit. And this is the weekly. We'll just put you on that in a second here. There we go. So
that's basically the last year.
That's a whole year. So here you were, January. It was flat, flat, flat. It came down. It came up a bit on the 6,000. But if you look at the Dow, it looks like it went up here and everything's nice and beautiful. That's how you know there's a bear coming, is because, okay, so some of the brothers did well, but the rest of the family's not doing so good. So you know it's going to come to a crash. And the economic stuff I was mentioning is now we're starting to get bail-ins. This is where banks are, fractional reserve. They lend money that they don't have. And sometimes they're a little bit loosey-goosey with it. And so now they're having to have taxpayers bail in. That legislation is in. So taxpayers, regular folks with your bank accounts, are having to bail in the banks because they screwed up and because they lost money. And so Portugal's the first country now to do the bail-in, and it's very quietly coming in the door, but the legislation's all there. So if you're a multimillionaire with money in a bank, you might not have that money. In Canada, I think you can go to a credit union and put your money there, and they don't have the right to steal that money. Anyways, so that's what's going on in the world, and so let me just we've also got Chris here today. Chris, you can see the screens and all that. You can just nod and we'll.
Yeah, I can see you guys.
Okay, great. So what we're going to do is we're going to help you with some of your questions in a little bit, but Scott was asking, well, what's the market? So what I expect, because I've seen this before, is that the market's going to do that, it's going to do a bit of this, and then I'm expecting this. Now, I'm not going to be betting, like buying puts in the long term and all that. I'm going to wait and see what it does. So when it breaks down below this point, then it's like, more bears coming, so I'll just ride the bear side. It's very easy that way. So that's the overall market, and because I've got a friend of mine here, we're going to talk about a couple of trading days. He and I we don't talk while we're trading. We just live our lives, and we get together, once in a while on weekends and say, well, what'd you do today? On maybe after the market's closed. And of course, he and I picked the same trades, but for slightly different reasons on the 19th and the 20th, and we're just going to go have a look at that. So I've got the 19th loaded. The stock that he and I both picked was ConocoPhillips, which is in the oil and gas industry. And I picked it, and this is the purposes so that you guys learn about things, is I picked it for similar but slightly different reasons than he did. And the most important thing about trading is you have to build your own rules and stick to them after you've tested they work without putting money on the line. And the biggest failure I see amongst all the people that trade with our system or trade wherever, because I know a lot of people that do trading, it's kind of like, you just meet more people that way. It's like you meet one, you meet another. And the biggest reason people fail is they don't have a system, they don't test the system, and whatever is in their head about what they're doing as trading is a bit fuzzy. And so when it comes to trading, the results are fuzzy, sometimes good, sometimes bad. It's not consistent, repeatable. So I have seen people use the exact same system that we have, the exact same rules, and one guy who's really good with following his rules. He's been investing for years, but he's very diligent about what's in his head and how he trades. He's been testing it. He's got an account, but he's proving to himself that it works. Boing, there's 1 point. And so he took $1,000 and just traded that for a month, and he turned it into $4,000. And he said, well, you can't do that. I said, well, yeah, he did. And so now this last month he took $2,000, and he's got lots of money in his account, and he turned it into $6,000. And you go, okay, so he's obviously doing something. And he sent me what his trading rules are. They're exactly the stuff that I teach people. So if it's not working, I'm not blaming anybody. It's obviously working for some and not for others, but I would look at, what are we doing? Did you get afraid and get out of the trade, or did you keep going with the trade? Anyways, we're going to go look at, here's the daily chart, or that was the daily chart. Let me just bring that back for a second. I liked this stock because oil and gas industry wasn't doing well, but because this is daily, it's pretty easy. If this thing just breaks a little bit lower, it might get to here or even further, in which case I could make some money. So I liked that stock for those two reasons. It's pretty simple. It was already a bear market, and this was a bear stock. So if it was having one of those green days like here, well, I'm not going to be at all interested. So I wanted to show me a little bit before I go do anything. So and I'm going to let my friend here say why he liked it, and yeah, that's pretty well it for me.
Yeah, the reason I chose ConocoPhillips that day was I was looking at the 60-minute on a WSG, and it was right at the bottom. So there was nothing to the left which was going to interfere with that. So I felt pretty confident that, given, of course, the news that, oil was just dropping like there was no tomorrow, that this would be a really good stock to get into. Plus, when I looked at the broker, the pricing on the contracts were actually quite good on the put side. So I felt that would have been, there's no reason not to get into that stock.
Yeah, I saw that. That's one of the things I do too. We all do that are some experiences. I check the spread, and what's the open interest, so I can get in or not get in. And this is the first minute, right? And the replay, it starts it out with the first minute being done. So compare that to other daily candles here, right? This thing's already, bing, bing. When I look at the height of this thing, it's already got some energy going on in the first minute of the trading day. So now you and I, let's just go look at what the day turned out to be like, just to save people trouble. I'm going to move forward just a little bit. I'm pretty sure, and I could look up my history, but I'm pretty sure I got the puts here. And because I figured there's lots of room to the previous low, so there's money to be made. In this case, there's like 74 cents or more before it hits SA. So I figured both things, I'm looking good. I usually, I'm a little more cautious. I usually wait till about the 6th minute before I jump in, just because I don't like the volumes, the flutter you can get. But it was such a clearly a bear day that I was pretty happy just to jump in. And somewhere around here I got that, and I think you got in even earlier.
Well, that day I got in, I believe, a little bit later as it was getting closer to the SA line.
Okay. So if we look at, I'm going to turn on the compare to the basket. So that's this line here. So the basket's all running down. Everything's running down. You know, you've got some strength here. Everything's looking good. And you're at a 52-week low. We already saw that. And I'm just going to hit the buy button. Let's bring that up. And we're just going to go buy a put now. So we bought at different times, but this is just to show you how it went, and I'm moving forward fairly quick. See, it didn't hesitate hardly. I'm going to back up a little bit. When it came to the low, you can see it bounced right there, and then the lows are lower on these candles, and the highs are lower. So that was, to me, pretty safe to stay in. It didn't bounce hard, and SA is right there along with the previous low. They don't always line up, but in this case it did. And so I quite liked it. And I think I got out around here because it was fluttering, and I thought, you know, I'm just going to take my profit. And you stayed in longer.
I stayed in because I saw the 52-week signal there, and I knew that chances are it was going to fluctuate around that line, but if it did break, it would just go hard.
Yeah, and that's what I was expecting too, but I didn't know for sure. And I got in earlier, so I got in here, so I was already up about 25%, and I said, you know, I'm going to take that. And so here, and I don't know what the percentages are, but I'm just going to move forward here in time, and maybe you'll spot the point that you got out.
There we go.
Yeah, so that's, yeah, so he hangs around, right? And then he's willing to do that because he knows the market. You've been trading for quite a while, like a few years, and so you know what you're doing. Whereas beginners, we don't want you to hang around because way too often, I mean, it was a strong bear day. You can tell that from here, but way too often a stock will do this and never come back, and people lose money, and they say, well, what'd you do? And it's like, well, why'd you hang on? You don't know the market well enough yet. And so I know that you did really well, and the difference between you and me, because I was actually trading my daughter's account, is you put more money on the line. So that looks about right for what you made, actually. So I don't know exact time you got out, but I remember we talked afterwards. Anyways, so
Alan,
it's, yeah.
Can we go back to when you got, or Vinny got, sorry, Mr. X got in, and talk about some of the reasons why you thought it was a good time to get in?
Why you thought it was a good time to get in? Hang on, sure. I'm going to go back, and we're going to go forward, and somewhere around here, right?
So the reasons were that it was approaching the bottom of the 60-minute chart.
Can you bring that up?
Yeah, there you go. So the previous low, but it's it's the whole year low, is right here. That's this candle.
Yeah.
So we're talking about breaking a year low.
Yes.
So it's never been this low.
Yeah. Not only that, Scott, though, but it was. I focus on the 60-minute. So if I see that there's nothing to the left of the 60-minute,
which means over here, and you know, we've got a few people that train. There's nothing over here to, like, in this zone, there's no resistance. See, like when you get into support resistance, it's like, well, you know, when you get up to this price again, you know, things bounce down. But if you had a channel like that, and there's nothing here, and you're down here, there's a decent chance it's just going to keep going.
Yeah, it's in the the way I look at it is it can go, and of course we don't know, but it can go in free fall because there's nothing to hold it up.
Right.
Whereas
And
if
you're looking at a longer term, so like if you're looking at the 60 minutes versus say the 1 minute, the 1 minute it's going all over the place in a general direction. So because you're looking at a longer term, and you're willing to stay in for a longer period, that gives you a different perspective on the market than when we're talking about if you're,
of course,
you're looking at 5-minute candles.
My screen is, what I have on my screen is I have the 60-minute and the short term, like the 1 minute or 5 minute, whatever time of day it is, so that I can see both at the same time, and that helps me make better decisions.
Right. Okay, cool. So, so the other part of the question that Chris asked was, it looks like on the other chart this is somewhat of an old move.
You mean on, here?
Yes.
Yeah, and so I got in here.
Can you put the time on?
Yeah. So I got in at 9:36 market time. So I got in here because I liked it and the market was stable.
Right.
But you'll notice that the basket came up a little bit, but the stock didn't. It just kept going and going. So I felt pretty good about that. And
so in this particular trade, because I just want to, I hope I'm asking the questions for Chris that he wants answered. What this is looking down is like the market is going down, the stock is going down, the basket actually retraced slightly and it didn't affect the stock. Now we're at the point where we're playing with the previous low, which isn't just a 20-day low, it's also a 52-week low, and it's the SA. So in other words, what we have here is we have the absolute bottom edge of the floor, if you want to say, and when we hit through that, there's nothing to stop it from falling all the way to the next floor.
That's right, yeah, and we don't know fully where the next floor is, but as a gauge, and that's why that D% thing is up here, it's like, well, this is 60% of its average range so far, so it's quite easily could go another 40%, which for a day trade, that's a lot of money. Right. Because you could be making 40% on your puts in that sense.
Right. So in this particular trade, you got in earlier around the second or third candle, and and Mr. X decided he would get in a little bit later.
That's right. But you see, that's the point about different trading styles, is that it doesn't matter. I know what he does, and it works for him. Mm-hmm. That's the most important part. Works for him. And then, because somebody else won't trade his way, they can't do it. Just like we've got Stephen in Hawaii. Some people can't trade his thing because it's just not their personality or whatever you want to call that. So you got to figure it out, and that's what the replay's for. It's like, man, you can make 1 million trades in there and not cost you $1, and then all of a sudden, and don't be crazy with it. The point of replay is to build good habits, not to experiment with weird stuff. Once you get your basic rules, you just repeat, and go, okay, you know what? A couple of refinements, I'm good. So yeah, so now I don't know if he wants to tell you how much he made that day, but the difference between what he made and I made on trading my daughter's account, because I was actually in Sudan at the time. Or no, I was back by then. Yeah, is how much he threw in the way of contracts. So what people do is they get a little bit dazed and glazed by, oh man, I can make $1 million. Well, yeah, you can, but if you can't make 1,000 or if you can't make 100, you're not going to make the million, because all you're doing is throwing more contracts on. So my friend here, he traded about 50 or 70 contracts because his account can handle that. And so my daughter's account's not that big. We're just growing it right now. And I think I took on 10 contracts. So guess what? I made about a 20th of what my friend did, because I got out on a shorter period of time and I had fewer contracts. But that's it. See, I'm not doing long trades for her because I'm growing it gracefully, gradually, little by little. And
everyone has their own risk. You know, some people are more risk averse, and other people are handle more risk.
And that also changes with experience, right? Because
Yes.
as you see these things, you go, oh man, you know, I could have stayed in a little bit longer on these last 10 trades, and I would have made more, but I got out because of this. If you've got that awareness, then you can it makes a difference.
Yes. Yeah. I'm going to just see someone else is here. I'm wondering if he wants to join in. So that was that day. You banked some good coin on that, more than most people make in a month. And you go, he did essentially the same amount of work that I did.
Yeah, I stayed in longer, and I was able to grab that nice steep downward move.
Yeah. So now we're going to go look at another day.
Before we go, Alan,
yeah.
Can you go just move back to the beginning, kind of okay, so Vinny stayed in, because I just want to have this like really clear what we're talking about in terms of percentages, because we only deal in percentages in the replay.
Sure.
But can you go back to, let's just say that, let's pretend that Vinny got out when it was white paint, he stayed out when it was green, and then we got, okay, it's going down, now we've got
tell me, so here.
You keep going.
Yeah.
Keep going. Okay, now it's white, so keep going because we're not going to be in there. 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 And okay, we're not going to get in there because it's green. Okay, so no.
It's almost there. It's teasing.
Almost there. It's teasing. No.
Bouncing along that line, and then when you get close to the bottom there,
right,
close to the low, it's going to go crazy.
Yeah, okay, so we've got the bottom.
Low of the day, right? Because when he says low, there was yesterday's low. We paid attention to at the beginning of the day.
Yeah.
But the low of the day is this one, and that actually tells you 11 o'clock bottom means anything before 11 o'clock, that's your bottom. So he's looking for this to crack that.
Okay, so we're going to do the same thing. When it cracks, let's buy it.
Okay, so I'm going to get out of that. We're going to move forward a little bit. Right now.
Okay, because the basket's going the right way. We've got red up at the top.
Yeah, the basket's with you. Everything's just running nice. And I think.
Yeah, got out around the bottom.
Yeah, he got out around the bottom. Now, you'll notice that.
Hi, Murray.
Right there's where I got out. He started to shift.
Yeah, and so when you say shift, what was shifting?
The candle went green.
There you go. See, the candle went green.
Well, so when you're at 65% and you buy a put and you see it gets green, that's a really good time to get out, isn't it?
Yeah.
Yeah, and you look at the height of them, right?
Yeah.
This high, and it's green, was higher than this candle.
Mm-hmm.
Whereas this green wasn't that big, and it was a lower high. This high was lower than that high. This one was higher, but it came back down, right?
Yeah.
And the reason for that was a retracement on the SC line.
Right. So there you go.
Which is expected.
See that? I love this guy. It's like he knows, right? So that's the difference with experience is you just go bing, 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 just like you're driving a car. It's like, oh, well, there's a guy in front of me, and he's moving into my lane, but he doesn't have his indicator on. Well, I still know what to do, or he does have his indicator on.
And then the other thing I've noticed is once it goes through, we call it a target price,
or
the SC line,
yeah,
that lots of time, not all the time, but a lot of times it'll go through that line for a little bit, and then it'll reverse.
Yeah, it seems to cross the fence, like here.
Yeah.
And this happens with 52-week highs and lots of other important lines, is it'll cross and then go the other way.
For a little bit, and then it's just going to go, and that's exactly what happened here. All of a sudden.
Can we see the volume?
Yeah. On this stock, it was great. So one of the things we teach,
There you
which just comes through experience, that's the only reason we know about these things, is when you have a volume spike, which is that one, it marks the beginning or end of a move. Now you had a volume spike here, but it kept going down. You had another volume spike here, but it kept going and going and going. The volume is falling off, but here's your volume spike.
Yep, that one really stands out.
Yeah, and you know that's the whole point of the replays is you know, to beat the drum is that you get to find that out and make sure you're right. So here's a volume spike, and there's the end of that run. Is it guaranteed to always be that way, that it marks the beginning or end of all runs? No, but it works a lot of the time. Well, that's a pretty good clue.
It's like you always say. You just stole my word. I said there's lots of clues.
Yeah.
Cool. All right, let's go to the next day.
Okay, so we're going to go now to this day, and we're going to go look at the same stock, which is, let's go alphabetically, there you are. So we're going to go look at the 60, and we'll get rid of that. So here we are, here's the 60. We can look at the daily as well. So this is all of yesterday. Today it gapped down, which is another one of those, might be another good day because it gapped down. The reef test, meaning it'll fill in this little gap, would be right there. But you know, there was more bad news about oil, and the market hasn't picked up. So here's the candle. It's already moved down. It's not going your way. It's not going back up. It's coming back down. So I don't remember when I got in on this one. I have to look at it. I don't remember when I got in. But maybe you can look at it. I know you got out around here somewhere because you called me on the phone.
I got in right away at around 6:35.
Okay, so we'll go there. Here we go, 6:35, which is right there. So we'll hit the old buy button if that's okay. And I'm just going to go forward to the point that you know you got out. Now, you know what, I mean, you can review this hangout later, but let's just talk about the principles that he talked about and we talked about. This green here, it came back down, right? It didn't stay up there. This green was a lower green. See, it wasn't as high, like the high was lower. So yeah, the market's coming up a little bit, but it's not a problem. Let me just keep moving here. And now, that candle may have gotten some people out, but you stayed in because he's already deep in profit, and he's thinking, there's more.
That's normal.
Correct me if I'm wrong. That's normal. Aha, how about that? That's good information, isn't it? So here we are, and this is what you were mentioning earlier, actually, was here's SB. It ran across SB for a little bit. You get the Y point, and it comes up. The market was up too, right? The market was moving up. But then the market starts moving down, and the stock follows very nicely.
Yeah, so that's profit taking at the SB line because most traders are going to sell at that line. So you expect it to go up, and now the next thing you want to see, what's that next candle doing? Well, it turned red. So I feel comfortable there because it seems to be a lot of downward pressure there. And then it bounces off the SB line again. And then, yeah, it comes back up, but I'm still not convinced that it's going to keep climbing. So that's really where it gets very tricky. Is that going to keep climbing, or is it just a temporary move of people selling to grab profit?
Mm-hmm. So there's clues here on this chart. These brown lines are secondary Y points. So, you know, it came down, so it's testing the bottom again. Then it's moving up, and then you've got this Y point, and it doesn't break it. So you're kind of like, you know what? If it breaks it, I got to get out. That's what I do. I would probably get out somewhere in here just because this didn't make much of a lower low. And for my daughter's account, I trade a little more cautiously until it's a little larger. She's actually going to start doing her own trading pretty soon, which is why we're growing the account to get something in there. It's way better than transferring money in. Go Dad. So I'm moving forward here, and at some point, Vinny, you got out.
Yeah. So basically, it kept bouncing off that SB line, and then I said, no, it's not going to cross that line and keep going down. So
yeah, so SB is right here. I'll put the line on again. So it's this line here, right?
Yeah.
So it breaks it, comes back up again, and I think that was the point that you said,
yeah,
done.
That's enough.
Mm-hmm. And you made twice as much money this day as you did the other day.
I did.
And you bought how many more contracts?
I was at 70 contracts that day.
So for those that say, well, you can't buy that many, you just did. and you can. There's not a problem with that. Some you can, some you can't. But when you're working with a broker, it actually shows you on screen what the national book order is. And you'll see these numbers in there where, like, 400 are being offered at that price, the bid and the ask. And then you'll see sometimes like 2,000 will be offered. Well, if you want some of that, you just got to hit the ask and you're in. You will get filled. So any thoughts, comments, questions?
No, it looks good. Did we figure out what the percentage was?
Nope. Let me just go back and let's go back to you got out here, which was the triple bottom.
Yeah, right about there.
Yeah. So that was 50% profit.
And you had 3 chances to make that.
Yeah.
It's beautiful. Like, I mean, you could, I guessed wrong. Oh, well. I guessed wrong again. Oh, well. Oh, I got it now.
Yeah, I've had enough.
Yeah, because he's one of the things that he's become an expert in. We had a trader a few years ago, and she made $1 million a year. Oh, yes, she did. She has a name. Her name's Judith, and there's a few of the fellows that met her. And she was using the software for a while, but then she became a swing trader and a mom and all that. And so what my friend's goal was to replicate her success in his life. And I have to say he's definitely getting very close to that. So it can be done. It just takes time. So that's it for me.
Cool. Thank you very much, gentlemen. This has been the Day Trading Options Daily Review for January 2016. We're going to be doing these on an ongoing basis. We'll be taking days and days as opposed to the last couple days. And thank you very much for joining us, and we'll see you next time. Bye-bye.